Fingers crossed.
I know, right? Okay. All right, Jim, let's go ahead and get started. We're glad to have you here with us today. This is our weekly tax strategy masterclass where we talk about some of the lesser known strategies that CPAs, financial advisors, and attorneys can be helping their clients with. And glad to have you on the show today. Where are you calling in from?
Good to be here. I'm just calling in from Salt Lake City.
Very nice. So, I've had people, I've got Eddie here from London. I've got, Brian here from Kansas. I've got Tina joining us now. She's coming in from Orlando. We've got some people here from Colombia. We've got people from all over the place that may have some type of tax situation here in the United States, and they're curious. They want to know what all the talk is about in regards to this charitable non-cash deduction that people can get in regards to a mineral strategy. We're gonna touch on introductions here in just a minute, but high level in regards to the topic of today, this mineral strategy. What can you tell the folks about what this does or what this can do for them?
Basically, it gives them a vehicle for a charitable contribution in a fairly narrowly defined, some fairly narrowly defined aspects of the tax law where there are a couple of situations having to do with charitable contributions that aren't as limited as some of the other aspects of the tax law. And so by investing in an LLC, which then makes charitable contribution of, in this case, minerals, then the taxpayer is able to participate in the deductions for those charitable contributions.
Awesome. Very good. Now that's wonderful. That's high level. That's what we're going to talk about today so that people can understand and know why you are an expert in this topic or why you have additional knowledge and resources here, Jim. Can we do just some brief introductions as to who you are, what your experience is over the last few decades, and how you became an expert in this mineral strategy?
Yeah, so graduated from the University of Utah, went to work for Ernst & Young, was there for about 8 years. Since then, I've had various responsibilities, mostly as a CFO, then as a CRO and a CAO, and then spent from 2014 to 2018 in Australia running the Pacific region out of Brisbane, Australia for the third largest explosives manufacturer and seller in the world. So along the way, I returned to the U.S. with that company. It's a global Spanish company, returned with them in 2020. And then I've been out, I've had a consulting business since 2002 and decided to pursue that full time. So I'm doing that now. So over the course of my career and the various things I've done, I've just been exposed to various tax strategies, various business strategies. This is one that I'm coming to know more and more about over time in this specific circumstance. So, it's just something drawing on decades of experience, touching on tax strategies here and there. And this is one that looked particularly, I guess, appealing just in the sense that there seems to be some fairly well-established tax law around it.
Fantastic. No, I appreciate it. And the intricacies of your education and your career over time from school to Ernst & Young to explosives in Australia from a Spanish company. I mean, that's just, we can make up some fun stories about that, right?
Yeah.
To consulting, and now from consulting to providing advanced tax strategies to other professionals like what we're doing today. Really appreciate your time. Thank you for being here today. And we understand that last night was a tax deadline for C corporations and individuals or otherwise natural persons here in the United States. And I'm sure that you were very busy. We always have those clients who last minute, maybe our normal clients know and understand when to bring things to us, but there's always those new clients, right? So I'm sure it was a late night like it was for many of us.
It was. We had a particular client who should know better, but it's really, the intricacies of high net worth individuals and how they operate. The guy has an assistant that does kind of everything for him, and The assistant was back east and decided that there's a stamp that he has with this person's signature, and that was going to be used to file the returns. For some reason, the assistant was coming to Utah and left it on the East Coast with his wife. I still can't fathom that, but so we have a very short window being able to get in front of the actual person to get him to sign the returns and send them in. We're a little bit lucky that we tried to e-file and failed, and so, and not to bore you all with a lot of details, but if you try and e-file and fail, then you have a short 2 or 3 day window where you can then file a paper return. So that's the only thing we have going for us. So
at least
unfortunately, I have to meet with him today, so it's cutting my time short, but I wanted to at least be on to for the initiation and make the introduction.
Well, let's just talk about some of the things that maybe people have participated in the past. Last year, in regards to the mineral strategy, there were a few different offerings, but the one that was most well known is the magnesium opportunity, of which we know and understand that some very large, high net worth individuals gobbled up the very last of that. What is available right now, and there's other things in the future, but right now what we're discussing predominantly is a volcanic ash opportunity. Similar strategy regardless of the mineral, but just high level. Can you talk about this new opportunity with volcanic ash and what is the charity or the charitable part or aspect of it, and how that counts as a deduction?
Yeah, so just again, high level and kind of big picture, the charitable objective that can be attained is really to get some very sustainable materials into the hands of farmers on a local basis, oftentimes in underdeveloped countries. This ash has very interesting and unique properties where for a relatively low cost, the need for additional fertilizers and pesticides are reduced. And so in a lot of third world countries and developing countries, it can be in high demand as a green alternative to other means of enriching soil. And so by having stocks of this mineral and being able to donate this material in places where it can do the most good, the charitable objective is obviously very noble and something that's not only noble in terms of helping out local farmers, but sustainable as well. So the big picture is very, very positive in that respect. From a practical standpoint, from a tax standpoint, the long and the short of it is that in 25 words or less, if that's even possible, you basically obtain a tax deduction, a charitable tax deduction, at the fair market value of the minerals that are being donated. And the delta between that fair market value and the investment at the investment level constitutes, I guess you could, a step up, you could call it, not in traditional tax nomenclature step up, but there's a delta there between where you're investing and the fair market value of what's being invested, and that gives rise to an appreciable charitable contribution.
Very good. So essentially, they participate at the raw mineral level,
right,
which is X, because we all know that before something is processed, refined, or ready for use, the generation or the mining or the extraction of that mineral has this value. And then, of course, over the processing or the preparing for actual retail use, what have you, it goes from this value to this value. Right. Whatever that delta is in between, there's a difference. And you might have put money in at this level, but you get a charitable, non-cash charitable contribution deduction at this level, the fair market value. And that's the benefit that people are able to get. In essence, they put money into this strategy. They get a multiple 3, 4, 5 times, whatever the multiple ends up being, based on commercially reasonable rates of that same product in the market. And then there's another delta, a tax delta. Essentially, they put in so much money, and then they get a multiple of that in a deduction. And then that deduction, based on the decrease in adjusted gross income, there's an offset of actual taxes that they would have otherwise had to pay. And typically that number is greater, which is an incentive for people to be charitably inclined, is to help them get an offset, not only a normal offset of non-cash charitable contribution, but a step up to fair market value offset, which oftentimes they get a bigger tax savings than their outlay of cash into the charity.
You've explained it better than I did. So
no, so here what we are two professionals, and you explain it one way and I explain it another way. In the same words, we say the same thing, but it helps people understand having 2 points of view, which is why we're both here today, helping people know and understand what they can do with their clients before year end. For those clients that are calendar year taxpayers, prior to the end of your fiscal or calendar year, you can make a contribution of this nature, either personally or from the company. If it's from the company, it's a different it's a different percentage of what you're able to offset. But let's just talk about individually. If they put money into this on an individual basis, what is the percentage of their AGI that they are maxed out to offset?
Well, it can be 100% depending on circumstances. So normal limits would be at different depending on circumstances, it could be 30 or 60%. But this actually is available up to 100% depending on circumstances. And again, that's what I was mentioning. Kind of as an oversight written into the tax law many years ago, there was a carve out for certain foreign credits and charitable contributions. Congress has made attempts to change that from time to time, but it hasn't really happened. So again, depending on circumstances, individuals can have up to 100% a deduction if they meet certain requirements, and that's probably a subject for another call, but it can be up to 100%, and then the carryovers are also available, obviously, as per usual. So the benefits don't necessarily go away even if you don't get them the first year, but for an individual to get them in the first year is beneficial.
Right. So let's say that an individual doesn't qualify for the 100%, and they just fall into the normal brackets of 30% non-cash charitable contribution limitation. And let's say that they are able to achieve, based on commercially reasonable rates of this product, fair market value, a 4 times multiple, which is very similar to what happened last year. So let's say they have $1 million in adjusted gross income, and they do 100,000 in this mineral strategy, right? So they're buying raw materials of volcanic potash, and that 100,000, let's say based on fair market values, it gets them a $400,000 offset. There is a limitation of 30% of adjusted gross income. So in the current year for 2022, they may get a K1 that shows a $400,000 value, but on their taxes, they're only able to take a deduction or an offset of up to 300. But the excess, that 100, they don't lose that. They just can't benefit from it. They just can't get that benefit in the current year. It rolls forward up to how many years?
Up to 5 years going forward.
Up to 5 years. And so as long as they're able to offset future income, as long as they have continued income going forward, they may have put in 100,000 now and they got a $400,000 benefit, and they were able to benefit or utilize 300 of the 400. But the next 100 can be an offset for the following year. And if for some reason they don't have consistent income, it can move forward up to 5 years, which is fantastic for individuals who have volatile income. It's fantastic for knowing that they may or may not need it later, but they've got up to 5 years to utilize the full benefit.
With apologies, everyone, I apologize, Jake. Let me know next time you'd like me to jump on, but I've actually got to go get this guy taken care of now, so my apologies.
No problem. We understand. Duty calls. Now, in the future, we'd love to hear how people can qualify instead of the 30%, how they can qualify for the 100%. As a little teaser, we'll have you back and we'll talk about that topic.
Sounds great.
Thanks again.
Thank you.
Bye-bye.
Bye-bye.
All right, everybody, as we are here right now, I do have my cheat sheet list of questions and answers in regards to volcanic potash. But I'd like to hear from you what questions you might have so that I can be guided into what items I touch on today in regards to this mineral charitable tax strategy.
Hey, Jake, real quick, is Jim just a outside source? Is he part of a company that's doing it? What is Jim's actual role? I got his whole background of like, hey, I'm highly qualified and super smart. What is he actually doing today?
Yeah, so Jim is a consultant. He is a CPA. He has a lot of different titles. Essentially, as a consultant, he is contracted with the company that provides this strategy. It provides the connection between the people who are mining the potash, which is actually a Utah mineral. So this comes from Utah, and then helps with the distribution channel and the tax and accounting behind the distribution channel. Jim consults with the individuals who are processing and filing the K-1s. And so he's a consultant who's been brought in to make sure that the entire process is streamlined. That is his role.
Okay. So would we, in theory, work with you, work with him, combination of the two?
I have access to Jim. Most people don't work directly with him. You'd work with me and Micah. Micah here on the team. She is the individual that would
Micah too. Oh man.
We all know that Micah's where things really get done, right?
Yeah, we might get something done if she's involved.
Yes. So all of our clients who might need some assistance, I can jump on to help speak to the tax ramifications of different scenarios, make sure that the appropriate amount is identified for them to contribute based on what their accountants are bringing to the table from their, calculations or estimates on what year-end taxes might look like, so that we can determine the right amount to participate in, so that they don't have to be carrying so much forward, right? Or at least that we're identifying that they're an eligible candidate for this strategy, based on federal taxes, based on state taxes, and occasionally some of these other taxes that might be out there.
Jake, and they're still estimating to kind of close and to lose the rest of the ability for people to contribute towards the end of November or middle of November. Is there kind of a outline timeline on that?
Yeah, so last year the cutoff deadline was, I believe, 3 weeks prior to the end of the year. However, we had a special inside. When I say inside, that sounds so wrong. We had
being recorded, Jake. It's okay.
And we're broadcasting live. So let's just say that we asked a few favors, and they allowed us to sign people up until the 31st of the year. Like literally, my feet were in the ocean, and I was on the phone with some clients from back east, and they were processing transactions, and they got the deduction. However, Micah says my phone's going to be turned off, or she's going to throw it in the ocean. And so literally, the first week in December, we're going to stop receiving money for this strategy. So people who are...
the process usually take from a client says, let's green light it to
2 days. 2 days.
Oh.
The sign up and processing of this is very quick.
Okay.
There's an application that Micah fills out with the client over the phone. It can be over the phone, it can be over Zoom, it doesn't really matter. We just need to make sure that we spell everything correctly, that we get all the right information, and it's fairly quick and simple. And then the client needs to respond to an email to electronically sign and then transfer the money. Now, it is imperative that they click a box. Micah will make sure that happens.
Awesome. And minimum is 50,000?
Minimum is 50, which provides, in theory, if the 4 times multiple holds true, which again, we did have a client that got more than that based on their participation last year. But just on average, we throw it out there, there is no rule of thumb. It could be 3, it could be 4, it could be more times multiple. Typically, it's a 4 times multiple that they get. So 50,000 provides a $200,000 offset based on that hypothetical scenario. Again, what is hypothetical about it? The fair market value of the end product that gets donated to the charity receives an appraisal every time it's donated. And should that appraisal go up or down, then that's what you end up with as a multiple.
Yeah.
However, none of our clients, not one of our clients, received less than a 4 times multiple last year.
Yeah. And say they put in $50,000, that takes care of everything involved, right? Like, is there additional costs above what they contribute?
There's not. There is an LLC that is created. You might have a registered agent in the state where, like Delaware, where that LLC was created. Call and say, hey, are you going to renew this? It's going to charge you $125 to renew your LLC. You don't need to renew the LLC that you got a K1 from after you've received the benefit. You can let it go. So there are no future or ongoing or additional fees outside of what the accountants and financial advisors and attorneys here on this call might charge their clients for the advice. But as part of the program, like Jim or somebody else charging something in addition, that doesn't exist.
Perfect. And then all of that stuff's taken care of, so clients don't need to actually do anything creating an LLC. That's all part of kind of the process that gets taken care of for them.
That's all included, yes. So an individual puts in the 50,000, the 50,000, any of the internal stuff that happens to make this thing work has been streamlined well enough that that's all taken care of with this contribution.
Awesome.
So that also lightens the load of all the consultants here on the call in the sense that they don't have to worry about paying a third party this or a third party that like you do with a lot of other strategies. This is just fill out the application, put in your information so that you can properly get the deduction, check the box, electronically sign, then you get a K1 in February.
Are you gonna untease the how do we get up to 60% to 100%?
You mean the 30% to 100%? I'm not going to untease that. That's a Jim
How do
thing.
you get up to that 60 to 100?
Yeah, so let's not confuse. There's a couple different things that we should clarify here. A cash charitable contribution during different years here in the past because of the pandemic, you've been able to get up to 100% of AGI. Or at different times it's been 60, or at different times it's been 50. Meaning, if you have $1 million of AGI, you could put in $1 million of cash into a charity and offset all of it if it was 100%, or offset half of it if it was 50%. That's cash. If I'm given money. Now, yes, people are transferring money, but they're transferring it to purchase shares in an LLC that has existed for over a year. This LLC is participating in the mining of this mineral, and that mining of this mineral then gets sold after it's processed and refined and made ready. It gets not sold, but donated to a charity. Actually, all of this is going to a charity in Haiti, and all of this is going towards helping the farmers in Haiti be able to provide fruits and vegetables and food, which they are direly lacking in their diet, right? This is going towards helping them grow locally so that not everything has to be imported. Anytime that there's a inclement weather, storm, what have you, it interrupts the ships from coming in, and the entire country practically starves because they don't produce enough of their own food to sustain themselves. Everything is practically imported. So this charity is helping them become independent and self-sustaining, helping them to be able to become self-reliant. And so, again, let me just go over, it was touched on very briefly by Jim. What does volcanic ash do? I mean, it sounds like such a strange thing, volcanic ash, right? It's a mineral that provides the soil with healthy foundation for plants, meaning there are certain areas in my backyard that are full of clay. And if I don't prepare my soil, I can't even get a pumpkin seed to grow. And we all know that pumpkins are very hardy, right? The volcanic ash adds resiliency to plants during drought and weather fluctuations, which is important in a lot of these third world areas. Supports plant growth, increases soil fertility, and trace elements to the farm and garden, giving the soil, plants, and animals the vital minerals they need to thrive. So it's like a soil conditioner, essentially, that helps the soil retain more water, as well as transfer its nutrients to the plants that are being grown there. Increases soil fertility, and the nutrients and trace elements give the soil, plants, and animals the vital minerals they need to thrive. It also benefits a root system and absorption of minerals and nutrients, activating the probiotic microbiome in the soil and enhancing the nutrients and flavors of foods and fruits. Anyway, it's an additive to the soil that helps things actually grow and helps them continue to extract more of what they need from the soil around them. And it's just an opportunity to participate and benefit in a really good cause in a country that direly needs this so that they can become self-sustaining, as well as you get a wonderful delta or arbitrage in the tax system for participating. Harsh, do you have a comment or question?
Yeah, I do have a question. So you mentioned that last year the average was about 4 times the deduction of the amount put in. But you mentioned like the range, like at 3 times the deduction. So if we're doing our tax planning strategy, is it better to be conservative and say the amount we put in will be a 3 times deduction? To kind of be conservative, or should we say it's 4?
In the heart of conservatism, and in a lot of their legal documents and everything else, they talk about a scenario with a 3 times multiple.
Okay.
They do that also because it matches and lines up with a 30% non-cash charitable contribution. So it leaves nothing extra. But in every scenario that we had last year, it was 4 times or greater. The question of conservatism is really a personal question between you and your tax planner and what you should strive towards. In an effort to be conservative, that means that you would be putting more money in to get what you would project as the same deduction, and you would likely end up with more of a deduction, which you would not lose, but you might have excess that would roll over to a future year.
Okay. And then how many years has this been going on for this for the mineral?
So this is based off of some of the same tax law as the arts and antiquities, which has been around almost 100 years. Now, that being said, how long have these people with these operators and everybody else been doing this? They're going on 3 years now.
Okay.
So they're using some of the basic fundamentals that have been in the tax law for a long, long time, with new operations that, as we were familiar with last year, with the magnesium. We understand that magnesium is good for your heart. The magnesium was extracted, the mineral itself, the raw mineral was then processed and improved upon or whatever, made ready into a supplement, which had a higher fair market value, which was then donated to the Stroke Foundation, which the Stroke Foundation then took those supplements and distributed them all over the world to individuals that have suffered a stroke, and then we're able to help prevent the next one from happening because of those supplements. And so the minerals, as they're being extracted, are refined and processed, and that's why there's an increase in fair market value from the raw mineral to a refined and processed good that has a retail value with a fair market value much higher than the raw mineral. Does that answer your question?
Yeah, that answers it. Thank you.
Okay, very good. Brian, what other questions do you have?
I don't really have much other ones as far as questions about it outside of the getting more than the 30%. The rest would just be logistics that we'd work out with you on specific clients.
For sure, for sure. Now, with these specific clients, we should probably review them sooner than later. And I say that because we felt like there was going to be more magnesium for this year, but some really, really high net worth, ultra high net worth individuals kind of gobbled everything up, right? So what we thought was going to last more years ended up, the whole mountain was taken care of all at once. With the volcanic potash, the mountain is there and the minerals are there, and it should take a long time, but just to be safe, work with your clients sooner than later. Get them in touch to review the appropriate amount, get their account or their CPA, or get with them on their estimated year-end numbers so that we can establish what that number should be, and obviously their level of conservatism if they want to go off the 3 or the 4 times multiple, so that we can project the actual tax savings that they would receive or that they're eligible to receive this year, and then decide on what amount they should contribute. So we should have those conversations literally this week, next week. We should, before the end of the month, be working with Micah to get a few of the finer details prepared and the documents ready.
Yeah, so we've already had those conversations with our clients, going over oil and gas, what that potentially looks like, and now we're just trying to decide with them which ones for this year versus next year versus how much, all that stuff. So we've started the conversations.
Very good. Very good. I would say that the next step is just scheduling an appointment. It might take 5 minutes after all of those conversations just to confirm numbers, and then hand them over to Micah so that she can process the application, make sure that everything's good on the paperwork, so that they get the K1 and the right name and the right social or the right tax ID number.
Sounds easy enough.
Yeah, and I say that because right now we have time. In November, I foresee it being a very difficult time to schedule an appointment. So right now, while we have time, let's have those conversations. Tina from Orlando, any questions today?
I was just using one of the forms and putting it in somebody else's tax return. That's just their doctor. So they get a big W-2. It's about 600,000, and they really don't have any. They have nothing. I mean, they have a house, $1 million house, but they do have $50,000 of itemized. But I was trying to use the forms that I received on my other client from last year, 8283, to fill in the numbers here on this person's tax return to see how that would work out. If it's, if it's something that just a high W-2 person like a doctor that's just getting a high W-2, it's something that would be a good strategy for them because they don't have any strategies.
Right. So when you say they have nothing, they don't have any other offsets that are significant. They might have, 50,000 of itemized, but if we were to add another 50,000 of this, they'd have another offset of 200,000 against their 600 W-2.
Yeah. I mean, their total tax line was federal tax withheld from W-2 was 176,560, and that's because I upped her W-2 withholding to be single and zero plus some dollar amount.
Yeah.
To kind of cover, because previous year she owed 30,000. She has 2 kids, but they're older.
Now we also have a spreadsheet, Tina, that we should probably look at with you. This might be a little bit easier rather than trying to plug it into the tax software to find out what the deduction will be. It is very likely that she could probably contribute around 70 or greater and have a very good benefit from doing that as far as a max contribution, so to speak. And that's just going off of my head, thinking that she's in Florida, that she doesn't have any other additional taxes to offset other than federal income tax. That could be something that would be very beneficial to her. If she has the 70,000 lying around, it would save her significantly on taxes, coupling that with the extra withholding that you've done for her. So
unfortunately, she doesn't have the money sitting around. She finds a way to spend it. She's divorced, and she seems to find these boyfriends that suck all her cash out of her. So I don't know. We just got rid of the last boyfriend. So, but like we just even started with the lower of 50 and showed her the difference. We're just moving from one place to another place and let her get that effect.
yeah.
And she's a doctor. She's
Well, let's just talk about doctors in general. If they have the money lying around, or if they have a line of credit, or if they can get a home equity line of credit, or any of these other access to cash immediate options, right? We've seen people do a lot of different things. We don't encourage that they get in debt just to get a tax deduction or anything of that nature. But doctors in general, we have several of them who participate in this strategy every year. There is a Fox News anchor who receives a W-2 of around $2 million. This is one of the only things that they can do to significantly offset their income and have it be better, because they put in less money than they'd be given to the federal government.
right.
Which is why the federal government allows for strategies like this, to help incentivize people, to give them that extra break so that they can be contributing to their communities and to charities that are helping communities. So it is an opportunity for people to get an arbitrage on their taxes by putting some money into this and saving even more on what they'd otherwise pay in taxes.
Right. And then they can run their mouths with their friends.
There you go. But of course, you do have to have the money in the bank, or at least accessible to you, in order to transfer the money before the year end, so that they can receive this deduction on their taxes that they'll file next year.
So if I wanted to introduce this to her, what would be the best way? I mean, besides me just talking with her and explaining it to her, then would we schedule a call with you?
Yeah, so I mean, discuss it with her first and see if there's interest, and see if she's able, right? It's pretty obvious that she's eligible if she's got a W-2 of 600,000 or more. Anything over 400.
She's got some money in I think, an investment account.
Yeah, if she has it in like CDs or marketable securities or something that she doesn't, if she's weighing the pros and cons of the possible investment returns versus the possible tax savings, and finds the tax savings to be more significant, there is nothing wrong with taking those funds that are readily accessible to her and participating in a strategy that's going to save her more on taxes.
Yeah, her real estate agent's trying to get her to invest in a real estate property and then get into a business, but then she wants to do something fun with her friends, and it's
that sounds more like financial psychology that you have to help her with.
yeah.
Call Tina and receive your therapy. Schedule a session today. Financial Strategies 101, right?
Well, I can't go against the real estate broker because I used to have my real estate license underneath him, but and we do work together on several clients, but like for this one, she's never going to get off the ground with this whole thing, and it's just, the only thing is that her daughter takes gymnastics, and now let's buy a building and have a gymnastics studio because it's fun with her daughter. She's just all like this serious high gastroenterologist, and then you take her away from the hospital setting, and she's just like a giddy little cheerleader. So,
right. Now, for some of these other clients of yours who also spend a lot of money for their quality of life, you've got some people who are in the call center space, some people in the tech space, some people having real estate. A lot of these individuals could also, if they're otherwise going to have, because of all their spending habits, if they're going to have a high tax bill, this could be something that they could be planning, kind of like the withholding that you do with the doctor. This could be something that they could be planning on every year as well, as a natural offset to their quality of life spending habits, right?
Yeah, our one friend has started spending in real estate and he is overspent. So we need to talk to him about different stuff. But then we have there's the other one that I don't think that you've met yet, whose father is going to have a $1 million transaction up in Rhode Island that we're going to talk about the deferred sales trust and other things we could.
Well, what I would say is we probably need to just take a look at a lot of their scenarios as you're doing tax planning for year end. Review those with Micah. She's got the spreadsheet, and she can really quickly calculate based on what the max benefit all the way down to the minimum contribution requirements, which is 50,000. What their options are, so that you can have that discussion with them, because a lot of them might be tight on cash, which coming up on Christmas is like the worst time to be tight on cash. So getting them to make a tax decision based on all their other spending desires, that's a conversation that, as their advocate, you have to negotiate with them based on next year's tax bill versus what they could be spending right now and everything else. That is kind of your challenge, your calling in life.
I kind of got a mulligan with all this because, we're all disaster zone.
That's right, there in Florida.
So we have till February 15th to file our 1040s.
Very nice. So you've got a little extra
So
time.
we flew right through that. So I'm going to be giving them I'm just like counting on about the tax that they will owe because we didn't have to file it, because we were in a hurricane. And so they're going to have this year's filing. And then I'm like, this is going to happen again next year. It's going to be worse. And we only have I told them we only had till October 31st because some of them need some retirement planning as well.
Very good. There are some other things that I'd like to go over right now on the the actual volcanic ash. Some of the items here that I'm pulling up right now that might be relevant to a lot of different people is, again, let me just go super high level overview of everything really fast. The volcanic ash, similar to the magnesium strategy, is a mineral, again, that we are extracting from the earth, and people are able to participate because there's a number of LLCs that are set up and have been operating to help and assist with that extraction. You can participate by buying shares in those LLCs, and then your investment or your purchase of those shares ends up being part of the actual mineral itself that goes through a refining and processing process that at the end of the day ends up with a higher fair market value than what you originally contributed. That higher fair market value, based on the appraisal it receives as it's being donated to the charity there in Haiti, is what you are able to write off on your taxes. Oftentimes, historically, it's been a 4 times greater or 4 times multiple or greater for that. Now, as it's moving over and you get that multiple, you end up with this non-cash charitable contribution on benefit on your taxes. This non-cash charitable contribution does have a limit of 30% of AGI, unless, of course, you qualify for those, which is the teaser for the next time we have Jim on, talk about how we can supersede that 30%. But I'm going to say for most people, it's going to be a 30% limitation. That's what you should discuss with your clients. That if it's a benefit of greater than that, such as if they have $1 million AGI and they contribute $100,000 and they get a $400,000 non-cash charitable contribution benefit, only 300 of that, because that's 30% of $1 million, are they able to receive a tax reduction for in this current year, and 100 of that will roll over to next year under normal circumstances. And that's based on a possible 4 times multiple in the fair market value based on what was expensed and the holding period being met, so that they can receive that fair market value deduction. Now, Harsh, did you have another question?
No, I didn't have a.
Okay, very good. Sometimes the way my system works is people just pop in and it looks like they're wanting to talk and ask a question. And sometimes I call on you. You may or may not have a question at the time, but feel free to ask anybody here any questions you might have. We are rolling up to the end of our time. We have 4 minutes left. And so if there are any final questions, feel free to ask those. If not, ways that you can get in touch with us. We have an 800 number. 1-800-773-1848. Ask for Micah. Or you can schedule on our website, strategictaxsolutions.com. There's a little booking tab of which you can schedule an appointment. And you can discuss, you can schedule a time with your clients, for myself or for Micah, to jump on and help explain in more detail this strategy, or to help you and your client come up with that exact amount that makes most sense for them to contribute before the end of the year. And again, I keep saying before the end of the year, we might just turn our phones off and go on vacation for the last couple of weeks of the year. So if we do that, we need to try and get all of this taken care of sooner than later. And if you're afraid that maybe some of your clients are looking at very high amounts to contribute, we should probably talk to them sooner than later, just to make sure that we're able to reserve everything that your clients need before everybody else fills up the schedule. Micah, do you have any comments to leave the folks before we sign off for today?
Not necessarily. I'm looking forward to helping you guys.
Awesome. Okay. Well, with that being said, looking forward to helping everybody that we can with this and making sure that we get everybody in and out. And again, the process has been streamlined. Literally within 2 days, your clients can be signed up, approved, electronically sign, transfer money, get a confirmation that it's all sent in and in good order, so that come next year they get the tax documents, the right tax documents that they need to receive this benefit for 2022 taxes. All right, everybody, thanks for participating. Thanks for all the good questions. If you do have more questions, again, the phone number is 1-800-773-1848. Please ask to talk with Micah, and she can either schedule you with me or she can take care of you and everything that you need for this strategy. For more information, give us a call. Thank you. Bye-bye now.
Thank you.